We've seen a really big increase over the past few months of people reaching out to Lifeline for support about financial stress and cost of living.
It's the hidden human cost behind the cost of living crisis.
We do know that there is a direct link between cost of living and financial distress and suicide.
Worrying new figures from Suicide Prevention Australia show 75% of Aussies have felt growing distress in the past year, with cost of living and personal debt the main causes for the fourth quarter in a row.
What we're seeing now is people who've never come to Lifeline before. They're people who are working, who are really worried about how they're going to pay their mortgage.
I've got friends that have had to go on antidepressants, anti-anxieties because of the stress of just having to survive day to day. It does get you down.
People can't survive and people are struggling mentally.
This afternoon, the RBA struck again.
The cash rate has gone up to 4.1%. That's a quarter of a percentage point increase.
It's for the Reserve Bank and its board to explain and defend the decisions that it takes independently. But I think out there in the community, people who are under pressure will find this decision hard to cop.
We need not just the Reserve Bank to respond to this. We need the government to actually invest in frontline services.
Whether or not you're an owner of a house or a renter, everything's going up. Wages aren't going up.
For someone that works in small businesses, it's really going to have a huge effect on our future.
It comes alongside the release of the official Misery Index, which tracks inflation, interest rates and unemployment, jumping 220% last year to levels only slightly below the peak of the GFC.
It's hard, it's very hard. I mean, when the bill comes in and it says it's gone up another 20 bucks or 30 bucks.
Everyone's trying to do their best they can and they just feel like you're getting behind each time.
So as the RBA again deploys the only weapon it's got, how much more financial and emotional stress can the average Aussie take?
We remind you, of course, if you find yourself in need of help, crisis support is available 24/7 through Lifeline. So that's 13 11 14. We're joined now by economist Nikki Hutley. Nikki, sorry for that bleak introduction to you, but I mean, there's no other way to approach this. I mean, this is a lot for homeowners and renters. We're hearing people like Deutsche Bank predicting there might be 2 more interest rate rises on the horizon. Is there any light at the end of this tunnel?
Look, in terms of, inflation has peaked and it is going to come down. It's just a question of how quickly it comes down, and that's what the Reserve Bank is worried about, I think. And so we are over the worst, but in terms of interest rate rises, I think we could see another couple before we get to the end. The Reserve Bank is very bearish. It's looking at everything, the negative side of everything. It's seeing everything as a risk. It's not looking to where the economy's softened, where things have moderated. It's really quite anxious about where inflation might get to.
Well, Nikki, everybody's angry at Philip Lowe, but is he the right target? Because how much of the inflation problem comes from big corporations' price gouging?
Yeah, look, this is a story that's been doing the rounds for a little while, and whilst they're certainly, we've seen profits go up again in the March quarter, and you'll see that with the national accounts tomorrow, it's not all about price gouging. In some sectors, that's certainly the case. We've certainly seen that with airfares, but in most sectors, it's not the case. It has been disruptions caused by COVID. It has been because we've had so much stimulus to demand during the COVID period, and we couldn't produce things quickly enough. In basic economics, you get too much demand, not enough supply, prices go up. And that's essentially what's happened. Add to that, obviously, the war in Ukraine and the impact on energy prices, and you've got just a recipe for disaster. Can you blame the corporate sector? That's not the full story. The Reserve Bank is the one making the decisions about interest rates, and they are led by their governor. And like any CEO, he has to wear a fair amount of responsibility, not just for what's happening now, but for the earlier mistakes of not picking the runaway inflation early enough.
The other element of it, though, is government policy. I mean, that's part of inflation. All Philip Lowe has is the one lever, and that's interest rates. So how much blame do you think rightly goes to our politicians as opposed to Philip Lowe?
Look, I think most economists have said, and there was a poll done recently by the Economic Society, that most economists are saying that the government did a good job with this last budget, that they actually got the balance right between tightening fiscal policy and being able to help certain households without overstimulating inflation. Treasury's own modelling showed the same thing. So I don't think you can point to the government. We had a small budget deficit that's going into a very small budget surplus. That's tightening policy by anyone's definition, which helps to bring down inflation. If you're worried about anything, perhaps the Fair Work Commission's decision might have prompted the Reserve Bank to tighten today. But again, there is no evidence that this is going to lead to any wage price spiral. So it's all jumping at shadows, in my opinion.
Yeah, I take your point. I understand why people are jumpy, though. Nikki, this is the situation.
They're not shadows. They're not shadows. They're bills.
No, I'm talking about the Reserve Bank jumping at the inflationary shadows. No, households have got, no, definitely not. I really feel for, especially younger people who've got into the housing market in the last couple of years. They're mortgaged to the eyeballs because of the cost of housing these days, and they've just seen this whamming. You know, a friend of mine was telling me they've just gone from 1.9 to nearly 6% in one hit because they've come off a fixed-rate mortgage. That fixed-rate cliff is going to keep unfurling this year. And if the Reserve Bank doesn't think this economy is going to slow really sharply, then they're not looking at the numbers. Of course they do, and their numbers and the forecast for unemployment over the year ahead are really quite scary.
Wow, and that raises the prospect of recession. But that's another interview, Nikki. Probably not one I'd like to have, but we might have to have it one day anyway. We appreciate your time.
Thank you.